Hey guys, it's Simon. Wanted to do a member-only market preview. I've been consistently late coming in, so I want to give the background for the day so that everyone's clear on what the objective is for the day and trying to be a little more focused and ready for the day to start without me running behind, basically. So it's proven difficult for me for whatever reason to get here prior to 8 a.m. I end up running behind, and then people aren't calm and ready for the start of the day. I want to eliminate that. So this is going to be my effort to take care of that. So let's get started. Obviously, we don't know if we're gapping up or gapping down. Buyers are in clear control. So let's start with the bigger picture. First of all, first thing I want to keep up with is what is it going to take in order to get a break to the downside? Well, if you'll notice, we have all these closes clustered right here between 2060 and 2067, with the exception of today's close, right, which closed at 2084, right? In order for me to get bearish, I'm going to need to see us trade below and hold below 2060. That's the first step, right? But think about it for a second. In order to get to that 2060, that's a 24-point rotation down from where we currently closed, right? It's unlikely that we're going to be able to break this easily tomorrow, right? Now, there's some scenarios under which it could happen. We could gap down 10 or 15, then open drive lower through here. There's several ways where it could happen, but as of now, based on where we're trading at this moment, I don't think that we have super high odds of getting below 2060. If we do, it changes the picture a little bit. But right now, that 2060 is the bull bear line for me on the bigger picture. It's 24 points below where we are. I expect responsive buyers in that area first time in general, right? The next things that are that I want to highlight on the chart is there's an open gap sitting right here at around 2008 3/4. Please check that against the CME close. And then we have the top of an open window sitting here at 2021, right? Obviously, that's a good 60 points away. Again, I don't think we'll hit it tomorrow, but I want to give what the bigger picture looks like. And then I want to add to that the 50-60 retrace. So I'm not worried about the bigger picture 50-60 retrace because that's just simply too far away. But the 50-60 from the gap, I am interested in. And that puts us, based on today's high, at roughly 2021 for the 50 retrace and 2004 at the 62 retrace. That's doable in the next couple of days, okay? So I'm not saying we shouldn't pull back. I'm simply saying that avoiding pressing the short side has been a very profitable decision over the last couple of weeks, right? So if we look, that trend line and this trend line right here, both of these have to get broken, right? I would draw that trend line and translate that onto the daily chart. You can see that that runs, well, if you'll plug it in, you'll see exactly where it runs. But these two trend lines have to get broken, meaning, let me explain this. We have to come down from here, right? Get underneath these, which will probably look something like that. And then what I want to see is a backside test to give us a push down lower, right? Or even into this 2000 level. We have to get underneath these moving averages. I'm not I'm not a trend line trader, as y'all know, but obviously it doesn't take a rocket scientist to figure out, hey, these two have to get broken in order to get any kind of downside move. We have to be able to get below this point. This should act as a point of support first time in before it gets broken, meaning I expect responsive buyers in this area first time in when it aligns with the appropriate support resistance level. So please place that on your charts. Be aware, first time in, particularly on a stretch, that'd be a good area to get a reversal back to the upside and swing back up. Secondly, until at a minimum we get below 2060, I expect the predominant trade to look like this. Push up in the morning, possible push down, and then a curve back up. This has been the overwhelming trade pattern we've had over the last really 3-4 weeks now. And in particular, I'm looking for a structure to be created near the low, a break of that structure, pop back in for a trap, and then a push up to the other end of the range. That pretty much describes the most profitable trade we've had over the last 3 weeks. Everyone should be looking for this pattern. I'm certainly looking for it, and I'll point it out when I see it, right? Okay, let me erase this. So everyone's clear. Buyers are in overall control. Yes, we're due for a pullback, but as I showed this morning, we can have a very long period of slow grinds to the upside. Nothing changed with the Fed today. We are due for a pullback, but I expect any pullback to be relatively brief. Unless we can, we have to do two things. We have to break this moving at these trend lines, and we have to get below this 50-60. If that cannot be accomplished, there really is no momentum to the downside, and I would expect responsive buyers to continue to push back in. I'm sure we'll have one nasty down day in here coming up soon. And so the question comes with that, right? What are we looking for that will help us identify if we have a potentially nasty down day coming up? Because we're due one, right? We're due for a down day. Well, the easiest way to identify it, and why don't I just give you a picture of it instead of trying to draw it? That's exactly what I'm going to do here. I'm going to pause it for a second while I pull this up. So what I've done here is identified what 3 days could potentially look like. The first one going back to September 9th here. And if we look closely, let's get the magnifying glass, wherever that may be. If I can find it, may not be able to, there it is. Okay. Okay. You can see here, we opened up, we attempted to push to new high, failed. This is essentially open drive lower, 3 down bars in a row. As you can see, the key defining factor in this, outside of the 3 bars are open lower, lack little to no counter rotation relative to the amount of rotation back up. This obviously came off of a gap up, so we would expect from this, first of all, is there a 50-60 retrace? You can see here they tried to bounce it at the 50-60 midpoint, was unable to garner a retrace. And then you'll also notice that no matter where you measure from, that at no point were we able to get a 50 retrace, right? Consolidated at the lows for the second half of the AM session. We got out of New York lunch, and then the market continued lower. As a matter of fact, the only thing that held this up on this particular day was that Apple had a conference call, and then we continued to roll lower from there. And as you can see, we closed, well, we didn't close on the lows, but not far off of it, and it was a particularly nasty day. As you can see, we opened at 1980, and we closed at 1935-ish, right, with a low near 1925. It was a big down day, right? The key to that was identifying the early open behavior, open drive lower, gave you a heads up. For those of you who are not super aggressive, simply skipping the first hour in this scenario, if you'll notice, if you skip the first hour in this particular scenario, I put you at 9:30, and look, the market got much more two-sided after the first hour and kept you from getting swept. Decide for yourself what your appropriate level of risk is. When I see this, and I know I don't want to get run over, I tend to just simply go, I'll wait till the first hour is over. Keeps me from getting bone crushed, right? So if we continue with this concept, let's bring this all in again. Okay, let's widen this out. Again, very clear in this particular case. In this case, we gap below prior day's low, right? Open drive lower. We did make an attempt we were unable to get a 50-60 retrace in this case again, right? It was just the opposite. In this case, we opened below the 50 retrace. Remember, the 50 retrace, I'm just pulling it down as we move lower, right? We're never able to get a 50 retrace, and there was no attempt at half gap or gap fill. Sellers were clearly in control here, right? Open drive lower. Now I want to show you something. Again, if you simply skip past the first hour and then look for trade location, the day got a lot easier, and you can see we curved back up. And the other thing I want to point out, on this gap down, this was early in the breakdown stage. Notice we still have this predominant U-turn, and we came all the way up to fill the gap before rolling back down, right? this is a pretty wild and volatile day. And look at the expansion of volatility. Narrow day, relatively narrow, lack of counter rotation, right? This is kind of like, looks like what we're in currently, right? We're just kind of having these small, rangy, not very wide ranging days. And then all of a sudden, right, bam, we had a little hint of expansion of range here, and then all of a sudden, bam, it gets direct. It gets two-sided market, but range really expands. There's a clear change in behavior in the market here, and that was also identified by look at the expansion in the range relative to the prior day. So these are all things that we're looking for in the first hour to give us clues as to whether or not things are changing, right? So we'll be looking for this in the morning. Is the first question we ask, is the range expanding or not expanding, right? So additionally, the following day, you'll notice we gap down, wide ranging day, responsive buyers come in. This is a big negative tick, and it was a fairly sizable move to the downside. You'll look again, one of the key elements is the 50-60 retrace, and you'll notice here we were able to attain a 50. They ran the stops back to the 62 retrace. You can see that here, but they were unable to get past the 50-60. We had pretty strong rejection. And then when we traded and closed below the first 5-minute bar to a low, that really gave you a clue that there was significant weakness to the downside. This is important. I want to show this here. There was a trap back in. See how it tried to trap it? See how it did it? This was the low point, but this was the first 5-minute bar, right? But you see how technically we trapped back in on a 5-minute bar, and then we rolled all the way back over. Right now, the traps are working pretty much picture perfect. This is a great example of when the environment changes, those downside traps will no longer work, right? But I promise you, up until this point, we can probably look at the earlier day. Here's the swing low. You can see we trap back in, retrace. Sellers are trapped, and they push up, right? But that will change. This is a great example. That will change when our environment changes. But as of now, I still expect those traps to work great to the upside, right? And as you can see, this day got pretty ugly here as well. But the other thing I want to point out here is when we go down, right? Notice this was a pretty brutal down cycle. But notice the easy downside trade only lasted for 2 days. 2 days down. Look at the third day. Look at the short squeezes back up, right? It was just enormous. People got overly bearish, and they really got run, right? And you'll notice that this downsided action lasted for a very minimal period of time before buyers took over. All I want to do on days like this, I just want to survive this, right? If I capture it, that's great. But again, most of the time, I don't know very many millionaire shorts over the last 5 years. Know lots of millionaire longs, don't know very many millionaire shorts. That's my comment on the short side of the trade. And so for tomorrow morning, let's go over to the chart really quick. I'm looking for whether we gap up or gap down, open drive higher or open drive lower. The key zones that I want to tag are marked with an S on the chart. You already have them in front of you, so there's no need to go. That means first time into here, these are pretty close to an automatic trade, as automatic gets for me. I expect responsive buyers out of each of these zones and or a substantial pause. If I don't have an S in the zone, I do think that we'll still get a pause or a response there, but important, okay? I need to see additional evidence, either tick divergence, a short indicator for swing trade, or a long indicator to swing trade prior to us hitting that zone. Something to help me out in this zone, right? I still expect the same response. My confidence levels are high with the S. This 87.50 to 89.50 would normally be a very high confidence level, but it's only 2 points above prior day's high. And trying to get rejection right there, right back down, is very tough. Therefore, the S was lifted out of this zone. But all the zones above remain. And obviously, the open gap is a key target for me. And I would probably implement my half-size double stop entry at this open gap at 21.0550. Even front run that by a tick or two to make sure I get a fill and they don't fail to hit the open gap before getting a strong rotation back down. Also, right, 2083. 30 up would put us just past 30 up would put us this 21.14. I don't think we're going to get there. I don't think we're going to get 30 up, and I think 20 up's more logical. So this open gap, again, prime location to get strong responsive sellers out of this area, expecting to push down out of there. on the downside. On each of these zones, this whole area is poorly auctioned, but it's a 30 points worth of area, so I kind of have to throw the poorly auctioned concept out. I expect a strong response, particularly out of 2065 to 63. Again, that's a 20-point stretch out. Wednesday's low becomes a prime. I do expect an attempt to respond back to the upside out of there. However, it does not get an S designation. If we get that low, it's in danger of breaking. I do expect responsive buyers at 2048.50 to 2046.50. So that's my 2 cents. I expect to push back up from these levels. I expect to push back down out of these levels, and for the zones in the middle, this will be interesting to see how it plays out. Looking for 10-point stretches in here for response, right, to stay on my safe side. So this is my attempt to give a little more clarity to the day prior to getting in. Again, the zones I'm focusing on are the ones with an S in it, are the ones I'm looking for, and then of course I'll have my regular trade setups through the day. I'm expecting this pattern to predominate until we have a clear and decisive break to the downside. And even if we get a break to the downside, I don't expect it to last very long before responsive buyers step back in. And clearly, right, shorting in the afternoon has been a highly unprofitable business, and it was today as well. So anyways, that's my preview for tomorrow, guys. Have a good night. I'll see you all in the AM.